All right, so today we'll be talking about the difference between capital appreciation and capital preservation. One of the ways a lot of people mix it up is when they see a particular property at a particular price, and they're asking themselves, okay, if I buy at this price, or those people that are buying at this price, how much can they sell? It's not everybody that is buying real estate for capital appreciation. And you too, there's a level that you are going to get to that you are no longer interested in capital appreciation. You are interested in this capital preservation. And everywhere globally, there is a market, there's a real estate niche, there's a real estate market that is strictly for capital preservation. And then there's definitely real estate market for capital appreciation. But this time around, we'll be telling you the difference and why some certain properties sell because they are for capital appreciation, and why some certain properties sell because they are for capital preservation. All right, in case you are coming across a video like this for the first time, this meet the property channel, and this way we discuss everything real estate. This is a real estate channel, strictly real estate, Nigeria real estate, Lagos real estate. We discuss the market, we analyze the trends. We just don't talk about profit here and returns, but we talk about the risk, the challenges, the scams, the shams, and we equip you as well as educate you about the jargon, the documents, and everything really that you should know before and when you start investing in real estate. All right, so if this is your first time here, welcome. Finally, you are late already because these are 50 on YouTube already. So we have hundreds of content already that we've done. So you are already lagging behind. But you can make it up. You can make it up. So after watching this particular topic, you can go to you can start with any of our playlists. Our playlist on pros and cons, our playlist on investor series, real estate masterclass, property analysis, risk assessments. So just pick up any of those playlists and watch the several topics that we have done under them. All right. So, and if you are already a frequent viewer here, welcome once again. You are definitely going to learn in this class once more, as usual. And if you have been watching our content, you haven't subscribed yet, this is another reminder, another gentle reminder. We want you to subscribe, and if you have subscribed already, thanks so much for that. I'm grateful. Kindly do turn on the notification button. All right. So let's discuss about the difference between capital appreciation and capital preservation. All right. So capital appreciation generally is people that are buying real estate for profit. They want to buy low and sell high. They want to buy when it's $1 and sell when it's $10. They want to buy when it's $10 and sell when it is $20. They want to buy when it is $20 and sell when it is $30. They want to buy when it's 100 naira and sell when it is 150 naira. So basically, they are buying for the growth that comes with that property in terms of what is happening in that neighborhood, what is happening in the economy, what is happening in the states, and also in terms of the inflation rate. Also another very big boost to appreciation, because it's not just inflation that brings about appreciation, which is like one thing I've got tackled on a lot. People tell you, oh, this property is now so value, and they tell you, yeah, it's because of the inflation. That's it. No, it's not just inflation. Even if you have 1%, 0.5%, or 0% inflation in a lot of places in the world, properties are still going to appreciate. Really, yeah, because properties is supply and demand. If there are still more people that need that property available, if there are more people that need that property more than the available properties, then the price is going to go up, because the only way to qualify those that are eligible to get that property is just to use the price. Price is the easiest criterion when demand and supply is not in equilibrium. Just as simple as that. So if you have 10 units of properties and then you have 100 people asking for it, you increase the price. It's who is willing to pay for it that's going to be able to get it. So it's not just inflation, really. It's not just inflation. Inflation is just one out of it. So we have the supply and demand there. Then we also have urbanization. We have urbanization there. Some of you have not been to Nigeria in 10 years, in 15 years. And I can guarantee you, if you visit Nigeria and you go to those places that you were living 10 years ago or 15 years ago, you will see a lot of urbanization that happening there. If a place urbanizes, property prices is going to change because there's a new road, there's a new train, there's a new bank, there's a new school, there's a new factory, you know. So urbanization is also another reason for capital appreciation, you know. And then infrastructural upgrade also, which is also part of urbanization anyway. It's also part of the reason why properties are going to increase. So if a lot of us are already complaining about what properties is doing in Lagos right now, trust me, we are how do you call it? Let me just say it in Yoruba. What we have, the current level we have is kisi kisi. So what is still coming is kasa kasa. So basically, what we are seeing right now is still like very very small to what is coming. You know, if those prices are doing what they are doing right now, when Lagos have not even urbanized up to 70% currently, the urbanization rate in Lagos is not yet up to 70%. We have a lot of bush in Lagos, really. Then Lagos still don't have 24/7 electricity. A lot of places are still not connected by road. A lot of places are still not connected by train. You know, and quite a lot of things are still lacking in Lagos. Quite a lot of amenities are still lacking in Lagos. Now imagine what the value of properties is going to be in Lagos when Lagos hits 90% urbanization. When Lagos starts having 20, 22, 18 hours steady electricity. When a lot of the amenities that is not available right now are now there. So do you think the property of 1 million will still be selling at 1 million if when those infrastructures or when those amenities get in place, or when those urbanization or rate of urbanization gets in place? So the fact is, the potential between what real estate can be in Lagos and what real estate is currently in Lagos is still wide, because there is so much improvements still in place that can be done. And the more those improvements are being done, the more it's going to be translating to the real estate markets. The reason why Dubai real estate is at so figure and Lagos is at so figure is because of the infrastructure gap. That's just it. Nothing else. Infrastructure gap. If Lagos can have the caliber of infrastructure in Dubai, the real estate, the gap in real estate prices is going to get closer. No other thing. It's just simple as that. But again, a lot of us don't like understanding simple things. So capital appreciation is basically I want to buy at this price, and when it's at this price I want to sell. Capital appreciation. Now, but for capital preservation, I'm not looking at I want to buy for profit. I'm looking at retaining the value of my money. And usually capital preservation is by the rich and the wealthy people. And that's why you are going to be shell shocked when I tell you that the property of $1 million is sold. The property of $5 million is sold. The property of 5 billion naira is sold. The property of 2 billion naira is sold. And you come there 3 months time, 4 months time, it's still closed up. Like that property is not yielding any 1 naira for them. And you wonder like, why did they buy this property? Why? It's just money laundering, Jare. It's not every time money laundering. List all the billionaires in the world. All the billionaires, even immediately your net worth starts crossing $1 million. You have one property that you just buy not to stay, but you buy it for this preservation. Because as at that time, there is too much money in your custody that you understand that keeping cash, you are losing money. So you rather want to put those cash and put those money in real estate or an asset that can at least preserve the value of that money. When I mean the value of that money, I mean the purchasing value of that money. So let's say, for example, annual inflation in the US is like 5%. So which means that if I have $1 million this year, next year I'm going to need to have I'm going to need to have turned out money to $1,050,000 for me to have preserved the purchasing value of that money. And in 2 years' time, I must have converted that $1 million to $1,100,000 to preserve the purchasing value of that money as at 2 years ago. And in 3 years, I have to preserve that, the value of that money must have become $1,150,000 for me to be able to preserve the value of that money compared to what that money can buy 3 years ago. And And the fantastic thing about real estate is that real estate can take a whole big money at once. So let's say my net worth is $5 million. I can just look for a property of $1 million and pack $1 million there, just to preserve the purchasing value of that money. So I'm not buying for the return. I'm not buying for the cash flow. I'm just buying to preserve the value of that money. And that's why luxury real estate will always sell globally. Look at what properties are doing in Dubai. People are still buying them. Look at what properties is doing in London. What properties is doing in Canada. What properties is doing in New York, Brooklyn. What properties is doing in Australia, Sydney, Melbourne. People are still buying those properties. Even though a lot of those properties are bought by foreigners, the foreigners are buying those. They are sending that $1 million, $2 million, $5 million into those countries to preserve the value of their money. So they are not after appreciation, they are after preservation. So it's not going to make a lot of sense to some of us at this stage, because probably we are just like at 100,000 net worth, 100,000 USD net worth, 200,000 USD net worth, 50,000 USD net worth. So, packing $1 million just in just one property is definitely not going to make a lot of sense to us. But everybody do it. As long as you have hit a certain milestone, certain net worth milestone, you are always thinking about the property where you can just pack 30%, 40% of your net worth to. Because it's better that your net worth is in an asset than is in cash. Currently, Elon Musk is worth over $200 billion. In cash, less than 1% of that money is in cash. So a lot of those money is in Tesla stock, SpaceX stock, different asset classes that he has bought, because those are assets that are going to be appreciating in value. So he will rather leave that cash in that stock. I even read about when he wanted to buy Twitter, he securitized his Tesla stock just to raise. So he did not sell his equity in Tesla just to raise the 40 billion or 40 whatever billion that he bought Tesla. He just securitized. He raised the money from other people and used his Tesla stock as collateral to buy it. So the worldly people have understood, or they understand, that real net worth is in keeping your money in an asset class, not in keeping it in cash. So that's why they don't mind whatever value the asset class is. So they just want to ask, will you preserve my net worth? Will you preserve my money? Fine. They are good. They buy it. So a lot of them are buying farmlands. A lot of them are buying islands. They are buying mansions. They are buying high rises just to preserve their money. So that's the difference between capital appreciation and capital preservation. So if you're looking at some properties selling in Lagos, particularly the luxury, high-end luxury market in Lagos, like around Ikoyi, around Victoria Island, around Eco Atlantic, I see people buying $5 million apartments, $3 million apartments, and you're asking yourself, what's like the average minimum wage of Lagos or a Lagosian? I'm sorry, the people that are buying these properties, they are not minimum wage earners. Number one, a lot of them are not even Lagosians. Secondly, they're just bringing this money from wherever country that they are, wherever they are making their money, and like just diversifying their portfolio. Put so million dollars in Dubai, put so million dollars in London, put so million dollars in Canada. Look at, okay, the African markets. Okay, let's do something in Eco Atlantic. Let's put like $2 million there. Let's put like $3 million there for capital preservation. Look at an apartment in Ikoyi. Okay, it's $2 million. You buy it, capital preservation. Don't care about the cash flow, because they are not after the cash flow anyway. They just want to preserve that capital, and they understand that as long as their money is in that asset, and every year in year out, they are submitting their portfolio to asset valuers, their net worth will keep increasing, because they're not keeping the money in cash. It's not in cash. The property is $1 million this year, and then in 2 years' time, the property is like $1.5 million. That's 500K have gone on their net worth. Capital preservation. So the game is different when you are trying to build wealth and when you have achieved wealth. Or let's say the game is different when you are trying to become rich and when you are rich. your thinking, your mindset, everything changes. And is a bit difficult for a lot of us to comprehend right now because we are not like we are still doing 9 to 5, trying to make ends meet and so on. But the entire game changes when you are rich. How you see money, what you can do with money, how you where you want to keep your money, everything changes. Because right now you are looking at your net worth is now more important to you than access to money. Because you understand that your net worth will continuously give you access to money. Okay, let me explain to you. Now, let's say Elon Musk for now. Elon Musk right now needs, let's say, $3 billion, and is probably like all the cash he has at hand, $1 billion cash that he can access directly, 1 billion. So he needs $2 billion. His net worth will give him access to $2 billion because people are looking at it that hey, he's worth 200 and something $billion now. I beg, just take this because they have that security and that mindset that he will return my money. He's worth 200 and something $billion. I'm just giving him $2 billion now. So that's why the rich people, they are always concerned about improving that net worth because that net worth will constantly give them access to cash. So all the cash that they have, they are constantly putting it in places that is going to improve their net worth. So they don't keep the cash. They're not going to be spending their own money. It's other people's money that are going to be spending. Because that their net worth will continuously give them access to other people's money. So that's how it works. So it's people like us that are still hustling that spend our own money. So when you reach a certain level, you don't spend your own money again. You spend on other people's money. Your own money is just to constantly improve your net worth. That's all. So that's where capital preservation comes in. And that's why luxury real estate forever and ever, regardless of the poverty in the world, the poverty rate in the world, and regardless of the poverty rate in any country. I think India poverty rate is like how many million people? There are still luxury real estate in India. That is selling an apartment of like $2 million, $5 million in India as we speak today. And look at that across every other poor country in the world also. There will always be a location in that country where there is prime real estate, and that prime real estate is still selling. Because the people that have money in that country, that's where they are going to preserve their money. So that's the understanding between capital appreciation and capital preservation. So it's people like us that are still trying to grow, trying to make money. We are always looking at the appreciation rate. What's it? 100%. How many years can I do 100%? How many can I do 200, 300%? We are still mekuno. So we are still trying. We are still hustling. So, but when you are actually start to making money, you are just asking yourself, what's the percentage this property is going to add to my net worth? Because my net worth will continuously give me access to cash. So my needs will be met with other people's money. So, but what percentage will this money add to my net worth in 1 year time, in 2 years time, in 3 years time, in 4 years time? That's what I'm after. Preservation. Just to preserve. So if you have questions about this, then you can drop a comment. You can drop a comment for me. I know there'll be a lot of trends online anyway, talking about some certain locations in Lagos, blah blah blah, whatever. I don't put my mouth. People that understand value will pay for value. People that don't understand value will always feel it's overvalued. So and it's everything. Everything. So you talk to some people, they'll tell you marriage is overrated. And then some people will tell you marriage is the most beautiful thing in the world. Two different people, two different opinions. One see value in it, one does not see value in it. It's just as simple as that. And that's how every other thing is in the world is. So there's something that you are spending money on right now that someone feel like is a waste. They don't see the value that you see in it. So for people that are buying those properties at so amounts, they see the value in it. You don't see the value in it, you call it overpriced. It's fine. Both of you are right. So that's how it is, basically. Feel free to drop your comments and let's hear your view, because the real estate market is vast. The real estate market is constantly changing, and people are adapting to meet those changes. And our advice is the same for you. Also, adapt, because there is so much money to make. Last year, 2024, crop production came first for our GDP, contribution to our GDP. Trade came second, real estate came third, construction came fifth. So if you have an industry that is third biggest contributor to the GDP and fifth biggest contributor to the GDP, construction, so If you're not in those two sector, and you're not in crop, you're not in agriculture, so what are you now doing? What industry? What sector are you now doing? There's so much money to make, really. So you can drop your comment and let's hear your view. Um, I'll do as well to respond to them. And if you come to my comments and you are being combative, it's fine. My response is always very simple. All right, or okay, I get out. I'm not going to argue. I'm not going to explain. I'm not going to. I just say all right or okay, I get out. Simple. I go and face making money. I'm not that I'll not argue and start. No, 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 no. So you just come and you are combative. Just say all right, sir, or all right, ma, or okay, sir, okay, ma, get out. So that's it. But we can have a conversation anyway. If you have a different opinion, different perspective, yeah, we share both our perspective and an opinion, and then each of us learn from the other person. If you are not subscribed yet to our videos, once again, feel free. I will love it. I will love it personally. I will love it. If you have subscribed to our videos, turn on the notification button as shown on the screen. If you have turned on the notification button already, kindly share. You thoughts share this video. I know a lot of you guys are going to find this helpful anyway. Share these videos, share it with your contacts, share it with your investors. Let them know the difference between we talk about capital appreciation of a property and capital preservation of a property of an asset. All right, so I still remain your number one property on the planet, your property and investment consultant, Rabi Mustafa. Thanks once again for watching our videos. I'll see you next time.